Howdy, Jacob here. Today we're looking at the Western Union Company. We're down to three left in the dividend yield screener before we change screeners. Very exciting. We see that now let's get to some of the financials here. $4.6 billion market cap on $5.6 billion enterprise value. So about $1 billion net debt here. We see that the company provides money movement and payment services worldwide. Company was founded in 1851. Been around just a little bit, I guess you could say. Revenue growth very negative, 5.5 billion in 2013 down to 4.5 billion in 2022. But again, that doesn't mean we can't find a price. Return on invested capital is averaging 20%. Unbelievable. What that means is if they could find a business to invest in, historically they've returned over 20% on that investment. So that's humongous. Current yield is 7.5%. So what that means also is that they're paying a lot of their free cash flow on a dividend and not reinvesting back into themselves, which means that there's really no reason to put a premium on this return on invested capital when you're not reinvesting anything. So you could have the best reinvestment of capital percentage in the world, but if you don't reinvest anything, then there's no premium necessary because the company refuses to invest at these immensely high rates. And so on a 5-year average basis, we're probably looking at $800 million in free cash flow on a 5-year average basis. They pay out $355 million. They also buy back a lot of shares. They've bought back a bit of debt consistently since 2019. And then not so much acquisitions, but a lot of devastations actually. You see in 2019, 712 million of divestment, and then in 2022, 887 million divestment. Okay, the balance sheet. Let's look at that. We saw $1 billion in net debt here, 2.4 billion long-term debt, 180 million short-term debt, and then 1.3 billion in cash on hand. In relation to their 5-year average free cash flow of 800 million, that's about 3 times their 5-year average, and they have $1 million in cash on hand. So fairly conservative balance sheet. Margins are relatively flat over a 10-year period, 41.6% in 2013 to 41.3% in 2022, and then 20% in 2013 to 19.8% in 2022. So a very consistent business, which means putting a value on it should be fairly simple. Obviously, everyone's going to have different assumptions here, but it should be relatively close. So to me, on the revenue side, it looks like they are a not growing business, but it looks like their growth is decline, or their decline of growth is fairly consistent. And so maybe after 7 years, their story remains where they're still established company. They're still a very well established company, but they're just not. They just don't have the same growth as they used to, but probably honestly pretty similar to today, which is why I'm forecasting a 9 on the P and price free cash flow. Because again, they're divesting the businesses. So when you decline through divesting, that wouldn't necessarily impede your price to earnings and price to free cash flow, because that should be based more so on the organic growth of the business, or if they do use it for acquisition purposes, it's for more efficient growth opportunities. And so as for margins, 14, 15, honestly, I'll probably just do 14, 16, create a wider range. And then on the share changes, they bought back a bit of shares here. Their dividend, I think that they can afford it, because right now on a 5-year average basis, 800 million, and we're saying that on the dividend side, it's less than 50%, and they're buying back shares. So if you keep the shares, if you just buy back shares and you don't change the dividend as a percent yield, it's going to actually, the aggregate payout is going to decrease. And so basically, if they buy back 3% of shares and they issue a 3% higher dividend, fake math, but they can pay out the same in aggregate. And so to me, I think they can actually grow this dividend probably 3% a year maybe just for a conservative, let's say 2% a year, and um, yeah, maybe I'll widen these. So 13 to 16, I just widen the margins there. But I mean, really, we're getting to a price that doesn't look too far off right now. We're saying 16% drop before you get a 15% return. If these assumptions are accurate for the next 7 years with this dividend, all of these assumptions are accurate. So, I mean, this would be a company I'd add to my list for sure. I mean, it has a 7.5% dividend yield. That's spectacular. Their payout is less than 50% on their dividend payout is less than 50% of their 5 year average free cash flow. Yeah, it's a declining business, but I said this in my last video, and I absolutely mean it. Everything is what you pay. So even a declining business can absolutely give you return. Think about if a business were to give you $1 billion next year, 900 million the year after, 800 million year after, 700 million year after. Would you pay 2 billion for the business? I mean, if you do the math on it and it gives you a 25% return, that's a way better investment than paying for $1 billion next year, 2 billion the next year, 3 billion the next year, 3.5 billion the year after that, and paying $1 trillion for it. Everything is what you pay for it. And in this case, yeah, it's a declining business, but it's a business that's paying out a dividend that's very consistent. They've actually increased the dividend almost every year except two, it looks like, in the last 10 years, but they've paid it out every year for at least 10 years. And its payout has been less than 50% in almost every single year. And on a 5 year average basis, it's absolutely less than 50% payout. And so, I mean, as long as they're buying back shares that are extremely cheap, that's great capital allocation. They're paying down a little bit of that debt so that they're a safer company, and then paying out a dividend when there's no other use for that cash. I don't know. To me, this could be a business that kind of makes sense. And obviously, I'll have to do more research on it if it gets closer to that 15%. But right now, this is definitely a company that I would want to do more research on to see if this could be a possible great price for some people. So thanks, and have a great rest of your day.